This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. On Stockbox today, we're joined by the CEO of Power Metal Resources, Paul Johnson. Hi, Paul. How are you?
Hello, Mark. I'm fine. How are you doing?
Yes, very good. Thank you, Paul. So, an RNS this morning, agreement signed to significantly increase your footprint in the Kalahari Copper Belt in Botswana. What can you tell us about it?
Well, of course, it's subject to due diligence and also the approval of the Botswana authorities. I have to say those things, of course, they're in the RNS. But it's effectively, I think, 3.3 times increase in the footprint if everything goes through smoothly, and takes us to one of the largest land footprints in the Kalahari Copper Belt in Botswana. It's targeting, of course, copper silver discoveries, and we're building on the base of the work that we've undertaken at South Ganzi with the two licenses that the strategic joint venture has within its portfolio already. So very exciting time for us. You really do need to take these opportunities when they come up to acquire additional ground where you can in some of the hottest territories. We've done it in various jurisdictions so far, with Australia, with the gold joint venture, in Canada with the Schreiber Hemlo acquisitions recently, and now we've done it in Botswana with our partners Kavango Resources, who I have to say have been exceptional in building this joint venture with us in recent months, since September, I think, 2020, when we announced the deal.
Okay. Now, I know you're a very busy man, and I don't know if you have time to look at your share price, but I guess that when you release news, you probably keep an eye on it. So how do you think it's performing?
Well, unlike many of my director colleagues around the different companies, I'm obsessed. So I look at my share price all the time. It's on the screen all the time. I think it's important for me as a company director to know the pattern of trading, to see what's happening, to monitor feedback from various shareholders, and that not just in terms of what people send to me, but also what's on, discussion fora and the various kind of social media sites. Share price wise, well, we're in a bit of a down market at the moment. I suppose if you were new to this business, you've been investing for the last year or so, you'll have seen a great performance in the mining space. You'd have seen share prices going up, your portfolio going up. Everything was one way, really. And now you're seeing the prices crunch down. It's probably creating a bit of panic and concern. But when you've kind of got the old grey hair like me, and you've done this for quite some time, you're used to these up and down phases. Now, it's a bit anomalous because in these times, you can release some fantastic news. Price goes, it does nothing. It stays flat or goes down. And it's a real worry for people. But that news that you're pulling out is being logged. It is being kind of stored in the data bank of investors. And then when the conditions are a little bit more positive, you can often see a price rush up, when there's no news one day and everyone wonders what's going on. Well, it's probably just a bit of pricing catch up. So I'm frustrated like all these shareholders. I have the largest shareholding in the company, so I'm bound to be frustrated. I have to explain to Michelle, of course, when the share price doesn't perform, and that's harder than anything else. But I'm, fine with regard to the business. I'm perfectly optimistic, as I have been for some time with our portfolio. And I think day-to-day share prices shouldn't be a deterrent for people to take a good look at some of these stocks, particularly when they're subdued pricing-wise from where they were just 3 months ago at the start of the year.
Okay. Well, you're building your footprint there in Botswana from this morning's RNS, and also you seem to be building a significant footprints across the portfolio. How do you manage them all and make sure that they all get the same equal love?
It's difficult. You can't really give equal love to a portfolio of different interests. What you have to do is make it a capital rationing model. So each of your portfolio interests have to compete for additional working capital from the central head office, as it were. And that's the model that we're building now. Well, I've always wanted to build the resource base in the company, but I didn't want to do that until we had enough working capital. And we got to that point, in January in particular. So we started to build the team, and we have an operations manager in-house now, helping me to manage all the central operational tasks. We have an investor relations manager now within the business, helping us to build and enhance our PR, IR in various ways. And also, alongside that, we have some great operational teams, either through JV partnerships or teams in country where we have, the 100% ownership interest or 70%, where we're working with some good people locally who can help us run our operations. It is tricky, and it was particularly tricky when it was kind of just me and the POW board. But now we've got the extra help. It's getting a little bit easier. And of course, the big issue is finance in terms of these types of packages where you have a large portfolio. We'd be very careful as we built this portfolio to not overstretch ourselves. And the incoming money, which was from warrant exercises effectively over particularly around the December, January period, charged up our working capital and has enabled us to consider the likes of the transaction we did today, which you simply wouldn't be able to do if working capital was particularly tight. So we do have a keen financial cost model in place and a budgetary model that controls how much we spend on things. I never want to run out of working capital. You've got to be careful as a public company in that regard. But we're sailing quite nicely at the moment forward, building our portfolio, and we're not under pressure financially, which is great.
Okay. Now, in Botswana then, in the Kalahari Copper Belt, you've personally had some success in this area before, haven't you, with Metal Tiger, with that project particularly being very much the talk of the town. Does lightning strike twice, Paul?
Well, I mean, I've never been struck by lightning, but I have had the experience of finding the T3 copper deposit in Botswana with Metal Tiger back in 2016. It bears similarities, it has to be said, what we're doing now with what happened back then. Initially, when Metal Tiger took on the package in August, I think it was August 15, and for the first 5 or 6 months, there was really not much interest in what we'd done in the KCB, Kalahari Copper Belt. There was some criticism actually saying, why are you investing money that you've made in the business? We made quite a bit of money from Kibo Mining in the early days of Metal Tiger in a investment that we'd taken, and we put some of it into Botswana. But when we made that announcement of one of the early drill holes hitting 50 meters of near 2% copper in the Kalahari Copper Belt, that changed everything. Our share price, which had been hanging around for quite some months around the 0.8 pence level, went up over a relatively short period of time it was getting on for 6.5 pence at the peak. A dramatic return for investors, and that was based, of course, on discovery. And of course, the strategic joint venture partners, in this case, Power Metal and Kavango, we think there's a good chance, otherwise we wouldn't do the work, of another one of those discoveries and potentially a lot more. So I think it does feel a bit deja vu-ish, and it's great to see the findings of the technical work so far, which is leading us towards the delineation of drill targets, which is, of course, the exciting event. And we're also taking this package, which is Kanye Resources, onto its own listing effectively. So it's pretty much value crystallization very quickly. For both the partners. So it has multiple angles to it. It's a unique package, and we're very, dare I say that word, excited about what's going on at the moment. Okay, good. So you've put them all into this company, Kanye, that's going to be IPO'd. Why? Oh, well, it's for a couple of different reasons. One, because sometimes it's great to take projects forward internally, and sometimes it's good to joint venture with partners, and sometimes it's good to see value crystallization in the sense that you take a cost off your P&L, profit and loss, as it used to be called, and you take it to an asset on your balance sheet. We think this at this time is the best route forward is the IPO route, because the copper supply demand situation is looking very favorable going forward. We've seen a big increase in the copper price. There's lots of interest in good quality copper projects. The Kalahari Copper Belt has delivered more than once, some major copper discoveries, and we think we have Well, we think we had already with South Guernsey a pretty unique package. We're building on it with the acquisitions that we've announced today, but we think it's a great package overall, and we think the market will be very receptive to it. So out with the Power Metal and Kavango businesses, there's an opportunity to see an acceleration in value growth of this particular package through an IPO. So that's our strategy at the moment.
Okay. Let me ask you this. You've got a lot going on. You're putting things into separate vehicles, IPOing them. You're going to get taken out one day, or bring in joint venture partners or farm outs. What's going to happen? You're going to be taken over?
It's funny because that's the question that I probably get asked the most, I would say, in terms of this kind of business. We are building large strategic footprints, and we're doing that deliberately. We're in a beauty parade, effectively, as a commercial business, and we're trying to attract investors' capital. In truth, we're trying to attract it from other propositions. It's a competition. So it makes sense to build packages that are very attractive to the investors that buy shares on the market. It also makes sense to position the company in a way that you will draw interest from larger organizations, mid-tier organizations who are looking for pipeline, new opportunities in specific commodities or jurisdictions. Now, by doing the things that we've been doing, which is securing strategic land holdings, Australia Gold, Botswana, copper, silver, the Tanzania with the Haneti project, Canada with the work that we've been doing. We are making ourselves attractive. If our technical work feeds through in a manner where we get a positive success from exploration, that should buoy the market in terms of the share price and the demand for our shares, which is great. But it will also draw in those larger organizations looking for pipeline, willing to work with juniors who have new opportunities. And of course, we're positioning ourselves for that. As for the grand takeout concept, that is mulled all the time. But how many takeouts do you see in our space realistically? You can hope for that kind of scenario and a white knight coming along, to make all the shareholders of fabulous amounts of money, but the practical reality is that happens very, very rarely. But what does happen is strategic joint venture arrangements with bigger players, and that is definitely something to aim for in our business. One key point, though, Mark, is that if you do those kind of deals, you have to make sure that you're working with partners who will get on with the job, because large firms, by their size and scale, probably will not find your opportunity the number one priority in the business. And you have to make sure any deal is structured so that they will commence work efficiently, get on with things, and get some progress. So that's another factor to consider with any partnership discussions that you might have.
Okay. Well, Paul Johnson, the CEO of Power Metal Resources, thank you very much for your time.
Thank you, Mark. You have a good day.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.